And so it's 1:30 p.m. and thank God it's Friday once again. It's time to see the updates from the world of business here on Business Incorporated. And here's what we have for you on the program today. Ghana's parliament legalizes cultivation of cannabis. But before that, Zambia debt restructuring tops the news. And then Angola is expecting a big central bank hike rate at its first policy meeting by the governor, Governor Manuel Diaz. And that Ghana story, it's now legal in Ghana. We'll give you the details here on Business Incorporated. You're welcome. It's the final one for the week on Business Incorporated. I'm Ini John McQuarrie. Let's do this together again this afternoon. We'll begin with market numbers to tell you that looking at major equities in the market at intraday, Nigeria is still in the red. Following that yesterday, 2 days, 2.5 now. We don't know how it's going to close. 0.24%. That's how the numbers look in the red at intraday. 62,599.19. I can tell you it's added a little bit from what it closed at yesterday. South Africa is on the green side, 0.19%, 114.2. That's what you have in Kenya. That's what it closed with. But Egypt is in the green, 1.16% at 70,342.29. Egypt is not open today, so that's Thursday's closing numbers. All right, now let's go to Europe now and see what's happening there. Going to Berlin, we can tell you that Germany, like many Western countries, have seen increased problems in trade relations with China. It's no longer news now. The government in Berlin has laid out its official China strategy. How will this look like, to be or not to be? We have our Lars joining us now with this. Hi, Lars, good afternoon. So tell us the details of this relationship.
Well, thanks for having me. Now, here's the thing. Germany is massively dependent on China, as are many other countries in the European Union. For Germany alone, let's look at some numbers. Germany exported goods worth just over 100 billion euros to China last year, and China exported goods worth almost 200 billion euros to Germany. For Germany, the main export to China is cars, actually to a point where the Chinese market is responsible for almost half of car maker Volkswagen's business. And that is mostly due to the fact that millions have come out of poverty there over the past decades. And why is that? Because China has changed. The country used to be mostly a cheap manufacturer for Western economies, but today China, of course, is a technology leader, and it is, as Germany's Foreign Secretary Annalena Baerbock said yesterday, quote, a partner, a competitor, and a systemic rival. She made it very clear that the aspect of systemic rival has come into the foreground lately. Now, there's a few aspects that have made trading with China difficult. There's the fact that China doesn't abide by free market principles, but that its businesses are very much controlled by the government in Beijing. They receive state subsidies, for example, that help them undercut prices internationally. China also, of course, has a terrible human rights record. Just think of arrests of democracy activists or the treatment of Uyghurs. Then there's the issue of Taiwan, and there's China's recent lack of reliability as a supplier, too. During the pandemic, China shut down entire cities and industries, closed its ports, delaying exports and leading to customers running out of goods or materials. And speaking of materials, recently China said it would put export restrictions on gallium and germanium, all very important resources that the West needs desperately. So with all that in mind, China is a hugely important partner for Germany, but one that needs to be handled carefully.
Yeah, carefully indeed. And that's why it will be interesting to know the details of this strategy of the German government.
Foreign Secretary Annalena Baerbock introduced the strategy paper yesterday, and she said the key to dealing with China lies in de-risking from the country, not decoupling. It means good relations with China are important and shall not be endangered, but Germany has to take steps to ensure that we're not so dependent on China that any problem arising there would threaten our economy here. Now, de-risking instead of decoupling has been the buzz here for months, ever since French President Emmanuel Macron spelled it out at the last EU meeting. But what does it really mean? It means that companies are asked to keep a much closer eye on their supply chains, ensure, for example, that human rights are not violated. It means closer agreement with other EU countries over possible sanctions to counter potential espionage or blackmailing by China. It also means that Germany is investing in other global partnerships in order to become less reliant on China. And that includes new raw material partnerships, for example, in Africa and Latin America and in the Indo-Pacific region. Nonetheless, according to the government in Berlin, Germany also wants to further expand its cooperation with China because, and I quote Foreign Secretary Baerbock here, we need it.
All right, so how has China's companies and others in the market received this?
Yeah, that's very interesting. Officially, everyone is pretty positive on it. Let's look at Volkswagen, for example. As I mentioned earlier, that company depends on China for much of its business. Volkswagen's management welcomes the political goal of the government's new China strategy, quote, to strengthen our own position, to reduce one-sided economic dependencies, and to create incentives for more diversification. To minimize geopolitical risks, Volkswagen agrees that Germany must strengthen its position in other regions. And some industry groups agree with the general idea of the strategy paper as well. But the German Institute for Economic Research says, for example, that there just aren't many details in the paper. There's lots of unanswered questions, and that is certainly true. Here's a similar opinion from the Federation of German Industries. They also generally welcome the strategy paper, but they say there is a danger, and I quote here, that the ability for business to act will be restricted too far, and thus the generation of wealth and innovation will be hindered. And yes, there might be a problem if regulation will be too tight when dealing with China, which we really just don't know. So as much as everyone is on board with the general idea of tackling China in new ways, there is still a lot unclear about how this will happen exactly.
Yeah, because everybody needs China, and yet everybody wants to do without China. But thank you so much, Lars Holter, for giving us that perspective. All right, let's backtrack a little bit and go back to the NGX and have an analyst join us to tell us what's going down there. The NGX is also having its AGM today. I wonder if that is going to affect the market in any way. But we see that the bearish sentiment continues for a third day. Don't know if it's going to end that way. But joining us to talk about this is Tajuddin Olayinka, the Chief Executive Officer of Wyoming Capital and Partners. Mr. Olayinka, thank you so much for your time. So how's the market at this time?
Well, market is still bearish. The bears are still taking hold of the market, and just the issue we need to sit around this time. Other investors are also waiting to see whether there will be improvement for them to also come in. So it's actually it's more or less a waiting game, so to say. Some investors will say, okay, are these people taking profit? Are they done with their profit taking? If they are not done, do I still wait or come in at this time? So it's something that, in fact, it's more like a waiting game for most traders. And don't forget also that we have two categories of speculators. There are some of them that are just believe that the market must be bullish, and so they take position from time to time. There are also the other one that believe that the market should be bearish going forward, and so they also take position. So these two categories are actually the one taking hold of the market at this time, and trying to either book profit or do bargain hunting. So that's the market we have at this moment.
So I wonder, how long do you think this profit taking will last for? Because this is the third day of the profit taking.
Okay. Now, this, I mentioned earlier that there are these two categories. The first category that normally operate around this time are those who borrow stocks. we call them short seller. They engage in short selling. They go and borrow stock and sell because they believe market will go down. And so once they begin to offer to the market will panic, not knowing that these people that are selling actually are not selling, selling what they have. They are selling what they have borrowed. So for that reason, market will still wait to see whether they still have so much to release to the market. But the other category is okay. Yes, if you have it this way, I don't think the prices are too low. That let me just still wait a little and see if you can come further down and then I enter. So we may still have it this way. In fact, today it's unlikely that we have to turn around today. But I expect that by next week, especially by Monday, we should be able to see some kind of turnaround. Because anytime market is at this level, people, especially those who are not so who are not so analytical savvy about the market we normally want to wait in the wind to see whether there could be improvement. So that is what that is what is happening at this moment.
So obviously we're going to close red again today.
That is what it suggests, because from what I'm seeing now, it's obvious that we are likely to close in the red. But don't forget, the bulls are also waiting. Their own is just to be sure that the people taking profit are actually done with their profit taking, and then they can enter. But once they are not sure that they are done, and of course, don't forget also that usually, when we expect companies to release the results, especially half-year results, and those results are not yet handy, investors will also want to wait to see what kind of results we are going to get, more so that stock prices have moved so significantly since the last time that they released the results. And so these category investors are also waiting to see whether the results will justify, or the earnings, the earnings, I mean the 6 months earnings of these companies will justify the kind of prices we have today, or they still have that prospect, going forward. It's more or less a waiting game for the market. There are investors who have the money, but they are holding back until they are sure that other things are are put in place, especially with these short sellers hitting the market.
All right, thank you so much, Mr. Tajuddin Olayinka, the Chief Executive Officer of Warimi Capital and Partners, for bringing us up to date on the market, the NGX. All right, let's move to other market now. Asia is where we are heading to now. Looking at the numbers there, most markets against in Asia are closed on Friday, for Friday. But let's see the details. The Nikkei 225 closed in the red, 0.09% at 32,391.26. The Kospi is on the flip side, almost 1.5% in the green at 2,628.30. The Hang Seng Index also green, 0.33% at the close of trade in Asia at 19,413.78. You see a mixed color right there for the Asian market. Let's head to the United States. Okay, we have more from the Asia. That Shanghai is green, 0.04%, while in Australia, it's almost 1% in the green at 7,303.10. We move over to the United States now. On Wall Street, futures tied to the Dow Jones Industrial Average were up on Friday, and based on quarterly reports from some of the biggest U.S. banks, as Mr. Olayinka talked here in Nigeria, we're also expecting some of those reports. But looking at the number, now the Dow Jones is in the green, 0.11% at 34,625. S&P 500 is, however, marginally down, 0.03% at 4,542.25. Nasdaq, the tech guys, they're doing red this for the features. 0.07, 15,701 for the United States. More markets now. Global benchmark Brent crude hovered around $81. Oil is moving these days, a barrel on Friday, with bullish sentiment over U.S. demand bolstered by supply disruption in Libya and Nigeria. Remember that shale disruption because of a leakage that has put pressure on prices in the global sphere, with both the Brent and U.S. West intermediate contracts had risen for 3 straight sessions, and in early Asian trade on Friday, poised to register a 3rd straight week. On Thursday, some oil fields in Libya were shut down because of a local tribe's protest against the kidnapping of a former minister. And separately, here in Nigeria, Shell suspended loading of Focado's crude oil, and that's because of a potential leak at a terminal. That's under investigation. Well, the Libya disruption is halting an estimated 370,000 barrels per day, while the loss from Nigeria outage is pegged at 225,000 barrels per day, according to analysts. Well, with the markets in a furrow of a tightening narrative, any more outages will push the oil price to levels that not even the most ardent bull would have predicted for the second half of the year. Both Brent and WTI futures traded slightly lower, with Brent at $81.25 a barrel and WTI at $76.75 a barrel. Let's take a break now. On the other side, we do have a conversation and other stories from the African continent. So join us again. This is Business Incorporated on Channels Television. Welcome back. You're still watching Business Incorporated here on Channels Television. Well, let's head to South Africa now. A lot of news from there. One of the biggest news is in a couple of weeks, BRICS will be holding there, and we do know the threat it brought to the economy some months ago when it was first announced, and how the rand dropped. But Matt Kindiger is helping us bring a closer look to the outlook, economic outlook of South Africa. And Matt joins us from London. Good afternoon, Matt. Thank you for your time.
Good afternoon. Thanks for having me on the show today.
Great. So I think it's time for another round of interest rate hikes. We've heard of Angola. They're expected to hike by a major percentage. Nigeria is also holding its meeting. We don't know, but we know the U.S. is, I mean, there's a tapering of inflation right there. Let's look at South Africa. Do you expect interest rates to continue to be hiked in South Africa?
So as we know, the South African Reserve Bank Monetary Policy Committee meets next week, and our view is that interest rates or a hike in interest rates are a little bit less likely next week than we've seen in previous MPC meetings. So if we do see a hike, it's likely to be very small, but our base case view is that there's unlikely to be a hike next week, and this is for a number of reasons. So we have seen inflation fall very sharply in South Africa over recent months. So the latest inflation reading was 6.3% in May, and this is the lowest since April 2022. And this is very close to the central bank's upper target limit of 6%. And we've also seen the rand regain a lot of ground after reaching record lows against the dollar in May this year. So certainly we expect the South African Reserve Bank to pause hikes or soften hikes for the time being. However, when we look to Q4 this year and into Q1 2024, we do expect there to be several additional interest rate hikes. And this is because we are going to see the rand lose value again. And this is also going to complement a rise in inflation. We are also expecting to see the US Fed raise interest rates at least once more before the end of the year, and this will put pressure on emerging market currencies, including South Africa. So certainly, although in the short term, we don't expect to see more interest rate hikes in South Africa, towards the end of this year and the beginning of next year, interest rate hikes are once again going to become a bit more likely.
So talk about currency. Where do you see the rand heading? We do know we know that investor sentiments really sent it to the negative side some weeks ago. Where is it heading soon?
Yeah, so the rand has been really interesting. It's gone up and down quite a lot. It has had a bit of a reprieve over the last couple of months after reaching a record low in May. Our view is that after stabilizing, the rand is likely to lose value again towards the end of this year and exhibit quite a lot of volatility. And there are a number of reasons for this. The first is that we are expecting load shedding, power shortages in South Africa to get worse again. They have improved in recent weeks, and this has given investors some confidence. But actually, this is not sustainable. Eskom is really in a downward spiral, and we do expect to see power shortages get worse. We are also expecting to see the economy post a small contraction at some point this year, and this will again undermine investor sentiment there. And there is some concern about South Africa's relationship with Russia, obviously, and there's a huge amount of uncertainty there. That's in the next couple of months. But when we look towards 2024, so the closer we get towards the election, the more likely it is that investors will wake up to the fact that South Africa will have a coalition government, or the ANC is unlikely to secure more than 50% of the vote in the election. And this will cause quite considerable investor anxiety because South Africa will head into uncharted political territory. So we would expect for sure the rand to be, beyond 21 per dollar at the start of 2024, and perhaps lose a bit more value afterwards.
Sounds like a reduction in the growth outlook for the country.
That's right. Yeah. So our view actually is that we are now expecting South Africa to post a very small recession. So a few months ago, we were forecasting growth of about 0.6% this year, which is not great, but it's still growth. Whereas today, we're now forecasting a small contraction of 0.2% this year. So we are expecting the economy to contract, perhaps in Q2, Q3, or Q4, or maybe all of those quarters. And this is really a reflection of the severity of load shedding, a very weak downbeat sentiment, very weak public finances. So the government, struggling to raise investment and spend. Consumer spending is very weak. Retail sales are way below where they were 2 years ago. And so we are seeing investors hold back, the public sector really struggle to stimulate growth, and load shedding really taking a very significant toll on manufacturing and heavy industry in South Africa. So we do expect 2023 to be one of the worst years in terms of growth for South Africa, if you exclude COVID-19 in 2020, since at least 2009. So certainly quite a downbeat view for South Africa. However, 2024 could be a little bit better, especially if there's a bit of clarity over who will be in government next year, and also if load shedding, power shortages do begin to improve slightly next year. So a downbeat growth view for this year with a slight improvement next year.
Sounds like South Africans will have to tighten their belt a whole lot, as we get close to the elections and the end of the year. But thank you so much, Matt Kindiga, practice leader, Sub-Saharan Africa for Front of You. Thank you for your time.
Thanks.
All right, let's bring you some other stories now from the continent, beginning with Angola. As Angola's central bank talking about rate is set to raise borrowing costs to cool inflation. That's at a 4-month high, and shore up its currency at its first rate-setting meeting to be presided over by Governor Manuel Tiago Diaz. Economists say that they expect the Monetary Policy Committee will lift the key lending rate currently at 17% by 200 basis points to 300 basis points. A hike would be first this year after 2 consecutive cuts and a hold before now. The International Monetary Fund has signed off on a $189 million payment to Zambia that had been held up for months as a southern African nation negotiated a debt restructuring deal with official creditors, including China. The IMF has said in a statement that Zambia's performance under the loan program remains strong. The International Finance Institution also mentions that all performance criteria for the first review of the loan and 9 structural benchmarks have been met, with only slight delays in the remaining 2. And in Ghana, Ghana's parliament had passed a law legalizing the cultivation of cannabis for industrial and health purposes, a move that will help the West African nation grab a share of the multi-billion-dollar global industry. The Narcotics Control Commission Amendment Bill was approved after its 3rd reading by Speaker Alban Bagbin, who said during the proceedings that the passage opens doors for companies to obtain licenses to grow the plants that has not more than 0.3% on a dry weight basis, and that's according to the provisions. Well, the Parliament explained that industrial level cultivation can be for fiber, seed, or medical use. Back in Nigeria, multinational oil giant Shell says it has suspended loadings of Nigeria's Forcados crude oil, and that's because of a potential leak at the export terminal. According to a statement from its local subsidiary, Shell Petroleum Development Company of Nigeria, exports of the grade, which was scheduled to ship 220,000 barrels per day this month, were halted on Wednesday after workers saw fumes near the single buoy which was loading oil to a vessel. Meanwhile, SPDC mentions that injections into the Forcados oil terminal have been contained while investigations are ongoing into the incidents. Well, still talking about Nigeria, the West African Specialty Coffee Association has announced the establishment of the Nigerian-Canadian Coffee Exchange Corridor, an initiative that aims to strengthen bilateral trade between Nigeria and Canada and promote the exportation of Nigerian coffee to the international market. According to a statement by Nigerian-Canadian Coffee Exchange Corridor, it aims to facilitate seamless trade and foster long-term partnerships between Nigerian coffee producers and Canadian coffee importers, roasters, and retailers. The president of the association, Larry Shegun Lean, says that through this partnership, they aim to share rich coffee heritage with the world while fostering economic growth and collaboration between Nigeria and Canada. And that's it on Business Incorporated for today and the week. Thank you so much for being a part of it. Do remember to join Ladi Williams 7 p.m. tomorrow for Capital Market. He will give you a summary of the market for the week. I'm John Mekwa. Have a great weekend.